Welcome back, Alpha Hunters. So, are you investing in AI incorrectly or wrong? Well, most likely you are. And I'm going to kind of talk about some similarities between our current market cycle and one that we saw in the late 90s, the tech bubble. But where do you think we currently are in this market melt up around AI and the AI craze? Are we somewhere in the middle on the rise? Are we somewhere around the peak? Now, I'm going to kind of lay out here a little bit of a reason why people probably not investing in the AI kind of space correctly yet. And for much of what people, were optimistic about tech back in the late 90s, well, I mean, we did eventually see tech wind up kind of dominating the economy. It just happened a lot later than what many people were expecting or what many people were buying into, right? Because we had that tech bubble crash that happened in the beginning of the 2000s. So I'm going to lay out a little bit of what I think on business cycles, and you may or may not agree, but this is kind of what I think. So I got here a handy, fancy, product cycle or feedback loop type of PowerPoint here. So I'm going to kind of go through this and just kind of talk about some things on what I do think about, just not really just AI, but product cycle. But I'm going to talk about AI along the way and kind of where I think we are, right? So it's very simple. Most economies, they work in a circular fashion. They kind of you get a new product, you develop it, it enters the marketplace, and you kind of go around until you get to another new product, and then it kind of goes full around circle like that. That's just kind of it's the constant evolution in the economy. Now, with our current state and the way I kind of think about it, you have a new tech idea come to market, AI, right? And we've heard the mentions of AI many times over the past 2 decades, 3 decades, but it really has never come to the market really until I would say here over the past couple of years, especially here in the year of 2023. We heard a lot more about AI coming into the marketplace, but it's not a new idea. We knew this was kind of coming eventually, but now we have seen all of those things kind of come to, and you see what it can be. So really the way I think about this like new tech stuff is this is things that people are just kind of working on, but it's not practical yet. There's people just in the back in those lab coats, they're working on it, but it's just not going to be practical. Whether we meet the certain technology kind of metrics yet, or we have the certain technology to make things into the marketplace, that's kind of part of it. That's just kind of the way I think about it. It's kind of the backspace. People are working on it, but it's not a big deal. Probably just need better technology to make certain things happen at that point in time. Now, if you go forward, you go to this testing phase. Now, the reason why I say this testing phase is because you start to see technology improve for like new tech areas. So like AI, we finally got like computational power. We finally get some of the things like large language models start to work, and you start to see what could be, right? It starts to kind of get there, but now it's all coming to a head to where you just need to put more emphasis on testing it. And what do we need to figure out from that testing? And this is where you move on to the next phase, the real world application. Then becomes, okay, what do we do from this testing area from this new tech, and how can it be implemented into the real world? So once it becomes into the real world, what's the applications that can come from it? What is the benefits of it? Where do we need to improve? And this is that interaction, right? There's constant probably cycles, feedback loops kind of going on in that testing, that real world type of loops kind of going on here. And this is where we do spend quite a bit of time once we do figure out that it will be a practical thing, but we just need to figure out how it will be implemented, right? Or how it needs to be implemented, right? So then you go to the implementation. This is where we got an actual product from that new tech, and we see how it will be utilized. And this is where the implementing into the economy, into the business environment will be, right? So this is where we start to see a lot of transition from old technology and into the new technology. And then the last phase would be the optimization, right? So this is where, we know the technology is like full steam coming into the economy. We just have to, as a society, as an economy, we just have to fully optimize around that new tech. And that's where, you start again. Once it's fully optimized, you get to new techs and you continue to constantly go around in a circle, just constantly making better improvements in the economy and your business area. Now, I'm going to go through two scenarios here, and both of these scenarios are kind of going to show what it's like to be at a company that is developing said new tech and bringing the new tech to market. And then the second one will be a scenario of what it's like buying said new tech and implementing that new tech in an already existing business. So what it's like, making money or earnings in selling that new tech or developing that new tech. Well, that new tech, it doesn't really, make money for a long time, right? The new tech, you're kind of putting some resources into it. It's not a great deal of resources, but it'll probably eventually come. You just got to wait for certain technologies to catch up. And that's why you have a little bit of, negative kind of earnings there. Just, you have some investment going into it, not a lot. Once you get into the testing area, this is where you have kind of figured out that, okay, we have gotten to the point where certain technologies have caught up to where we can start to invest in it and play around with said new technology like AI, right? It took us a little while to catch up with semiconductors that can process large language models and software so that we can test around with it. So this is where you start to put a lot more research and resources and people into understanding and testing said new technology like AI. This is where then we move to the next step, real world. Okay, so we've tested a lot of it. We've kind of figured out, okay, we got some ideas here. We need to go into the real world. And how does it work in the real world? What does the real world want with said new technology? And this is where it can take a while, right? Because just because you bring some new tech to the world doesn't mean the world wants it, right? We've seen that a lot of new ideas have come over the time, and it doesn't mean that the real world wants it. So this is where there's a lot of, give and take, negotiation, understanding changes kind of go along with that new tech. And you don't make a lot of money here, right? For those companies that are trying to develop it, there's not a lot of money to be made because people don't trust it yet. But during this time period, you do start to see that shift, and then that's where you start to then go to the implementation. Now, implementation, you see, we actually don't have as much negative, right, as we do in testing in real world. And during the implementation, you're still trying to grow your business or, your product into that marketplace. So implementing does have a little bit of a negative there, but it starts to transition to where you are starting to make money. You just haven't gotten it there. And then, during that implement, optimize type phase, when your technology or AI in this case fully takes over and it is dominating in the economy and you can't really run a business without it, or you run a business at a severe disadvantage. This is where during that optimization phase of that new tech into the economy, this is where those companies that are selling that new tech, where they make a killing on the money, because you can't run a business really without it, without the product, or you just run at a severe disadvantage and basically you would wind up going out of business. So it just you can't really do without it. And this is where this is the most optimal path for any kind of new business, is you have to go with the newest, latest, and greatest, right? So this is where those companies that do have that new tech, they would make a killing because you really wouldn't be able to run a business without it. So next, let's look at what it would be like if you were on the other side of that negotiation and you are now buying said new tech. Well, if you're going to be buying the new tech, well, really, you're probably not investing in new tech, right? So NA, not really applying to you, right? It's not really a big deal. Testing. So this is kind of a question mark, and a big reason why this is kind of a question mark is because, are you involved in testing? Do you make a strategic partnership with a company that has this said new tech, and they're probably subsidizing you, but you're still having to use company resources and labor to see if it kind of has any kind of work or trying to get it to work, anything like that. And this is where you kind of go then to the real world, where you kind of get some benefits early on, because the people that are still developing said new tech, well, they're still wanting to know what's the best application for it. And you kind of get the benefits early on of said new idea, new tech, to kind of lay off people or speed up processes. You kind of figure out where the benefit is, and this is then when you want to, for that company that's buying said new tech, you want to then implement that across your business. You want that, make that more streamed, more mainstream across everything you can, right? So this is the phase where many of those companies will see the best benefit is during the implementation, because they are phasing out old areas and it's not quite implemented everywhere yet, right? But you're going from basically think about it this way. This is where, as a older business or an old company that's going in with this new tech, you are getting rid of employees that are basically outdated, right? You're going with new tech, not really to say that your employees don't know how to use the new tech, but you don't need as many employees anymore, so you can either not hire or lay people off, and you're going with new tech that's better optimized, like AI. So, and then you go to the last phase where it's optimization or optimize in the economy, and you don't make as much money, but you're still constantly using said new technology to make the best optimized, best way to make money, that kind of thing. So you do get a little bit there for the new business, but this is where it is now so ingrained. The new tech, the AI, is now so ingrained in the economy that you have to pay for it, right? You have to pay for it, but you still are going to get to see the benefits of it, because if you didn't get a benefit from it at this point in time, well, you would just go back to the old way. So you'll still see some benefits there, but now you're going to pay for it, and the other side is going to make, like we saw before, they're the ones that are going to make the money then at the end. Now, the reason why I kind of bring up these two kind of situations is because many people I'm going to go back and forth here. Many people in, looking at new tech, they only look at the end result, right? They only look at the end result, and especially, when they buy companies in the way of stocks, they only look at, oh my gosh, this technology is going to make so much money, but yet they don't realize that there's a lot of other steps that you go along the way. Now, this is the way I like to think about economic cycles, because that's just kind of the way I do it, or, product life cycles or something like that. But this is just the way I like to think about it. But as far as like buying or bringing in new tech, it's really around the real world implementation part. This is where those companies that implement or they bring on said new tech, this is where they will see a lot of layoffs come into their workforces, and where they see, that's why you have the double plus here, right? Double green plus here at implement, is because there's a lot of making money as they're transitioning from old technology to said new technology. Where I kind of think we are right now is kind of more in this real world around AI. And I think a lot of people are really out in front of their skis on AI. Now, it's not to say that everything in AI, in the world of AI, is a bad investment or hugely overpriced or overvalued. I just think for the general factor of people thinking, anything to do with AI is going to make a lot of money right now, and I don't think that's the best way to go about it. And so when you look at the Nasdaq 100 index, and this is the chart basically back in the late 90s, early 2000s, you can see a huge run up, right? We all know about this, but this is where when people realize that, oh, those earnings are coming way later down the line, and then you get that huge drop off in the early 2000s, right? And this drop off, if you don't know how much of a drop off this is from the all-time highs, it was roughly an 83.5% pullback. I mean, that's a pretty substantial pullback, okay? So just understand that just because you have some new technology doesn't mean that it isn't overvalued, right? And people rush in to think that, oh my gosh, look at how much money all these companies are going to make. Doesn't mean that there's not more cost to be burdened on those companies that are developing it now, that once they've fully developed it, it won't be as bad later on. So just understand that they're still trying to really develop AI, and it's not just easy money. Okay. A lot of people thought the .com era was easy money. All these companies are going to continue to make money. And we saw that that wasn't in fact the case. Okay. So that's about all I want to say. Like, depending on where we are, might not be the best spot. And you've seen me show this chart off on the channel before. This is the Qs versus the IWM, and the way you can kind of think about it is the Qs is the one developing the new tech stuff, the IWM is kind of the one legacy older businesses, the companies that aren't so much trying to come up with all those latest and greatest kind of things, or they don't have the capital kind of invest in those areas. Now, it's not to say that a lot of companies in the IWM don't have that, but they're smaller, medium-sized type of companies. So, not exactly your stalwarts for leading the new direction. And, if you just kind of look at the difference between the Qs and IWM relationship here, you can see the huge drop off that we have. So the way I would rather play it, honestly, currently right now in the marketplace, and looking to see where we currently are now and how elevated we are on this relationship. Obviously, we're taking out that tech bubble time frame. Is I would rather be more invested in the IWM, because if this ratio goes down, the IWM is going to be outperforming, and I would rather wait for a tech correction, and then I would much rather then allocate into tech. I don't want to allocate into tech now. There's a lot of things that are still unknown. There's a lot of things that they still haven't figured out, like how much things cost in AI. So that is where I just want to bring this up. I think a lot of people are just little too optimistic, looking a little too far ahead of what AI is going to be. Now, if you're going to be out there stock picking, obviously that's a little bit different kind of situation. I'm just talking more in generalities, and I think there are still some really good stocks out there to be bullish on for AI. Just understand, if we do have a market correction, they would all get hit. It wouldn't just be like, oh, this one's leading the pack, it's going to be okay. They would all get hit. Okay, that's about the only thing. I would rather be invested in the one that's going to have the proof for a little while, and you also don't know when AI is actually going to be monstrously profitable for companies that are developing AI. So that's one thing that I would say. I would just say be in a safer area, especially when you look at these two relationships. And if you want to allocate back into a riskier area, I would do it after you get euphoria kind of dropping off from the tech and that kind of thing. So that's kind of the way I would go about it. That's kind of the way I look at business cycles and that kind of stuff. But anyways, I just thought I would bring this up. Alpha Funders, have a great weekend. Take care.